Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. We're going to get you guys what you need to know before you roll, and that's going to talk about the economic data, see how that impacts the overall markets, maybe sprinkle in a little geopolitical fodder to round off that market analysis, then talk about some option strategies we could implement into a portfolio based on the assumptions we come up with. All right, so without further ado, don't forget to hit the like button. And hey, you know what? I come in unannounced on these morning videos, so make sure you're subscribing with the little bell right next to the subscribe button. We are also on Facebook, so you can always check us out there if you want to comment and do those kind of things. So take advantage of that because I do make sure I try to read those comments as I'm going along. All right. Overall markets. Yesterday, we were talking about how the economic data was shaping up. We had those Philly Fed indexes. We're seeing the manufacturing numbers pull back a little bit. We're seeing some inventories start to rise. Housing inventories were coming off because of higher interest rates. We also saw that the median home price is at another record. 391,000 is the median home price. And then coming into today, we were looking at some retail sales numbers across the pond in Europe. Wasn't expecting a whole lot coming out of the retail sales from Great Britain, but came in at 2.8%, expected to be 1.2%. So really, that was a 1.4%, expected to be a negative 0.3. So really nice beat on that number. Also decent revision to the backside number there. We also got producer price index coming in out 2.8%, expected to be 1.2%. So continuing to see these higher prices for the manufacturer. And, you know, we're hearing from like Walmart and some of these major retailers, the big box stores, that they aren't able to pass a lot of the inflationary aspects on to the consumer. That's some of these pullbacks we've been seeing with Target, Walmart, and the like. So I got involved a little bit early, thinking that they had pretty decent earnings, but some of the overhead issues are really kind of causing a bit of a drag in the overall markets here for those stocks that I was looking to layer on to my portfolio, and I'm going to continue to as well. All right. So with that said, we've got the markets right now. Something I wanted to talk about here is crude oil. You know, the other day I was driving and seeing a family talk about they had $100 bill and were trying to figure out what they were going to do with it, spending it on gas, or are they going to spend it elsewhere? She was basically literally saying, I got $100. What are we going to do? And they decided on $11 in gas, which was $70 friggin' dollars, folks. So when we're talking about what oil prices are doing to the economy, that is a perfect example. People are right now being forced to make very hard decisions. Where am I going to spend this finite amount of money that I make in a given year on gas? And where am I going to spend it elsewhere? We're already starting to see restaurants where folks beforehand we might be buying an extra drink, maybe have 2 drinks at dinner or get a dessert. Those things are starting to see the pullback. Folks aren't drinking or having a second drink at their dinners and are not having the desserts. So those are some really key things, the little nuances that we start seeing folks like us start to do and how we start to spend our money. Well, that's one of those aspects that I talked about. If you're spending all your money in the gasoline or if trying to fill up your tank so that you can go and work, well, that means that you can't spend that money elsewhere. Maybe it's a dessert. Maybe it's going and buying a coffee at Dutch Bros or Starbucks or something. Those are those little things where that velocity of money starts really picking up the economy, or at least holding it. When we see the money go straight to the gasoline or into crude oil for those byproducts that are making plastics and things like that, that drives price higher. We aren't able to then spend our money in ancillary aspects of the economy, which is what is the driver, the main driver of the economy. So, and you hear me harping about this on oil, it is really what is going to determine our fate here. And the current administration has not opened up any new land. They have not allowed any new permits to go through, whether it's for natural gas, regular pumping for crude oil, fracking, or offshore even. So all of those things are causing some angst in the overall markets here, and that is going to hurt us in the long run. Gold futures starting to make some moves here. One thing to note here with bonds, it's starting to look like we may have seen the at least major parabolic move in inflation happen right now. Looks like it's kind of tapering off a little bit. I don't think that it's going to completely start to pull back here or be that transitory as much as the Fed wants us to believe. But one of the things we're starting to see here is the bonds are starting to show, the bonds are starting to show, and the 10-year, that the Fed is probably not going to be able to have the pace of interest rate hikes that they had expected going into this year because of the stagflation type of situation that we could be getting ourselves into. So bonds making a little bit of a move to the upside. I still believe it's opportunity to do covered calls to hedge against that bond portfolio, because I don't think that interest rates are going to go back to the levels that we've been at recently. So with that said, any type of move to the upside is that opportunity in bonds. Bitcoin not getting a whole lot of love lately, not even on major TV. Folks are really starting to pull away from that as a store of value there. VIX off a little bit because broader market's getting a little bit of a boost here. Now, Fridays, I don't like to go in and turn my hands around, especially in a bearish turn here. We've gotten lower lows, lower highs, which is indicative of bearish patterns and bearish markets. Well, mainstream media is not going to say it's a bearish market until we get down 20%. Well, we're down about 18, so it's pretty darn close. I would have been calling this a bearish market well in advance of that. As soon as we start getting lower lows, lower highs, that's when I'm calling a bear market. That being said, it looks like we still have a little bit of downside here. I think that the market hasn't really panicked a whole lot of people, not really put the thumb screws to folks. So there's still some opportunity, but I don't know that there's another major leg down like we've gotten another 10%. So while I've been talking time to sell some puts or sell some put spreads to layer in some stocks into our portfolio, this is the time. Yeah, you're going to get run over a little bit. You're getting paid to play, though, when you're playing with options here. So that said, I'm going to continue to look to add stocks to my portfolio through selling puts, because if I don't get those, then I just get to keep the money. And I'm all about that right now. Dow Jones Industrial Average, we talked about this. Yeah, they're going to talk about the big numbers on the downside here, down 300, down 500 in the Dow, but we're down, back up 200. I don't know if that's enough to jump on board here. We need to break this lower lows, lower highs type of pattern here. And we've got another lower low. We have to break this high in order to break this overall pattern. So we've got a little work to do. I'm not going to jump on board until we start to see that full on, getting long with the stuff. It's going to be incrementally small selling of the puts in these markets there. All right, E-mini S&Ps, again, looking like it's got a little bit of room to the upside. But again, we're looking at lower lows, lower highs. Yeah, some folks will be saying we got tweezer bottoms here. I would keep an eye on that for sure. We've got tweezer bottoms with two nice little dojis here. So are we working through this? That would be one of those indicators that looks like, hey, we finally said enough is enough. It's time to start buying. So keep your eyes on that. A break below 38.55 is going to be another leg down again, but a break above, let's call it, what's the top here? 41,000 or 4,100 is where we're going to be looking to settle in order to break this pattern. All right. So those are the two things that you're going to be looking for: 4,100 or 30, let's call it 38.55, 38.50. We see that kind of settlement. It's going to be off to the races to the downside, because I think that's where we'll really start to see folks come in as you start to see those prints saying we're down 20%. That's where we might see some folks start to hit that panic button. All right, overnight inventory, very long here, but as we've seen, the overnight inventory gets flushed out in the morning, and because they haven't flushed themselves out heading in right now, I think that we could see a bit of a downside push here. Late in the day, that's going to be the determining factor for what sets up. I think that folks are going to be a little bit cautious this weekend, as I've called for the last Fridays. I just don't see the institutional money holding big positions, speculative positions over the weekend. So that being said, I'd just be wary there. All right, EA, when I'm talking about all these bearish markets, there's always a bullish market somewhere. Just like in bull markets, there's always a bearish market. Found you a bullish market here. If you're looking for opportunities for the upside, we talked about the bullish risk reversal with this one. Kind of like a synthetic long, but not as much risk really. We get ourselves a little bit more wiggle room to be right with that type of strategy. So I talk about how to set that up in the webinar yesterday. So please check that out. You can go to Pro Trader Strategies. Make sure you're subscribing, liking, all of that good stuff, because then you can participate in all this content. I don't just do morning market commentaries. I actually drill down on some of these option components so that you guys can really understand the levers and pulleys of what you're trading. That said, this playing to the upside, I think I'm still good with that. But any type of pullback here, breaking outside of this value area, 127 is going to be something where I'm just going to say, that's the ripcord. I'm not going to take this on anymore. All right. So we're looking at a long EA, bullish risk reversal. All right. That's all I got for you guys. Hope everybody has a great weekend. Good trading. And if you can't take that, take it easy.